Last week was brutal. It was one of these choppy, soul-draining weeks that chews traders up and spits them out. And I'll be honest with you, it wasn't easy for me either. But the good part, I still managed to pull out almost $30,000 out of the market. All thanks to ignoring the noise and dialing in 2 time frames. I combined the 1-hour chart for structure, zones, and bias, and the 5-minute chart for precise sniper entries. And when they lined up, I attacked, and that's what paid. But here's the thing, weeks like that used to be a nightmare for me 10 years ago. It was like the choppier and harder the market direction was to read, the more trades I took. Stupid, I know. I was forcing trades on the most unopportunistic markets imaginable. And the worst, I didn't even know I was doing it. I was just subconsciously shredding my account and wasting my life. And you know, I had the nerve to blame the market instead of myself. It wasn't until I had to learn to slow down and focus on high probability setups only. And yeah, I had to learn that the hard way. And in this video, I will show you how I filter out the noise, how I use the 1-hour and the 5-minute chart together, and how I step in where smart money steps in. And the best part, you don't need years of experience to start using this strategy. In fact, it's so simple that you can start using it tomorrow. And as always, I will back it up with live trades that I took live in our trading community. Before we jump into step 1, let me explain why combining 2 time frames is such a game changer. Most traders make one of these 2 mistakes. They zoom in way too close on the smaller time frame, trying to trade every small move on the 1-minute or even on the tick chart, and get chopped to pieces. Or they zoom out too far, staring at the big picture but missing the actual zones and entries that matter. So the real edge comes when you combine both. The higher time frame, in our case the 1-hour chart, gives you the idea where smart money is positioned. And the lower time frame, in this case the 5-minute chart, gives you sniper entries. Together they filter out the noise and give you more clarity. So step number 1 is drawing our magic lines on the 1-hour chart. This step is crucial because it is going to show us where smart money is positioned. So we want to open up the 1-hour chart and we want to draw a horizontal line around the previous high, the previous low, and the breakout areas. So that right here is the YM futures, the Dow Jones, and the hourly chart. And as we can see, this right here was the previous high. Therefore, I'm going to draw a horizontal line just like that. And that right here was the previous low and as well the breakout area, which is why I am drawing one more line around this zone. Now let me show you a trick and explain why I call these zones the magic lines. Let's switch to the daily chart now. As you can see, the zone that we marked at the top is matching with the zone a few days ago. 3 days ago, this was an important high as well, which is making it a very important liquidity zone. If you look back lower, the low that we marked right here is matching exactly with the high right here, which is making this area as well an important pivotal point. And if you look further back, you see that this was even a pivotal point all the way a few weeks ago back here, where this zone was tested 3 times. So again, the zones that we're marking on the hourly chart, they're matching with the highs and lows on the daily chart, which is why these zones are so important. These are not some random drawings on the chart. They're matching with the pivotal highs and lows from the daily, where most likely smart money is going to place their buy and sell orders, and we want to be positioned with them in their direction. But of course, the $1,000,000 question, how do we know where to buy and where to sell? This leads me to step number 2, our rules. And by the way, the rules are extremely simple. We want to be buying at the lower line, which represents the previous swing low around this zone. And we want to be selling at the upper line, which represents the previous swing high around this area. If you're short selling, you want to be short selling around the upper line, which is again our previous swing high, and you want to cover your positions around the previous low. We do not want to open any positions in the middle of the range around this area. This is noise and chop area. In other words, we want to avoid this area. Do not diddle in the middle. But why do we want to buy around the lows and sell around the highs? It's actually very simple. The lows represent the biggest and most committed buyers. This is where smart money puts their buy orders. And this is also an area where most amateurs and beginner traders either chase breakdowns or put their stop losses. And smart money knows that. They use that information and that zone to grab liquidity and enter their long positions. And it works the exact same way in reverse. Around the highs, most smart money place their sell orders. This is where they sell their long positions or open short sell positions. And unfortunately, this is where most amateurs and new traders are chasing breakouts or placing their stop losses. So by knowing that information, we want to be positioned on the right side. We want to be positioned where smart money is placing their big orders and flow with them. So before we get into the entry details on the 5-minute chart, I want to make sure that you fully understand the 1-hour chart zones, which is why we're going to take a look at one more example. This time on a different asset. This right here is the gold chart, and we're going to follow the same process. We want to mark the previous swing highs with a horizontal line, and the previous swing high was right here, which is why I'm going to draw a line just like that. And we also want to mark the previous low, which is right here around this area. You can also mark this small breakout area right here, which represents also another important liquidity zone. Based on the information that I gave you, what would you do here? Buy or sell? If you said buy, you're exactly right. As you can see, the price slightly broke below this area and immediately reversed to the upside, and it is going straight towards our upper zone. Now, based on the information that I gave you, what would you do here? Buy or sell? If you said sell, you're exactly right. Seller stepped in and pushed the price lower, and the price is heading towards this area. Now that we know how to draw our magic lines on the hourly chart and how to mark these important liquidity zones, it's time to figure out how to enter on the lower time frame, how to combine the hourly with the 5-minute chart, which leads me to step number 3, waiting for a very specific candlestick confirmation on the 5-minute chart. The candlestick confirmation that I'm talking about is called the pitchfork. And some of you who are following my videos, you know that I use the pitchfork mainly on the hourly chart. And I like entering also based on the hourly candlesticks. But sometimes there will be cases where it makes sense to switch to the lower time frame, especially when you have choppy markets, wide ranges, and you want to have a precise entry with the minimal risk and huge reward potential. So what exactly does that mean? When we switch to the 5-minute chart, in a perfect world, we want to see 3 to 5 candlesticks to the downside if we're about to long, and we want to see one green candlestick first. The entry happens as soon as the second green candlestick goes above the high of our first green candlestick. This is our confirmation, and this is showing us that there are more buyers stepping in around the zone that we marked from the hourly chart. This is what we're going to be looking for longs. And also, it does not matter how this first green candlestick would look like. In some cases, it would be with the wick on the bottom, a John Wick candlestick, and in other cases, it would be a simple green candlestick. So that does not matter. And it works the exact same way in reverse. If you're short selling, you want to be looking for 3 to 5 green candlesticks in a perfect world, going straight into our zone that we marked from the hourly chart. and then we want to be looking for one first red candlestick. As soon as the price starts breaking below the low of that first red candlestick, this is our entry, and the stop loss can be placed slightly above. And this is going to just give us the confirmation that there are more sellers stepping in around the highs that we marked from the hourly chart. Now, I want to show you the exact 3 trades that I took live in our trading community. I want to show you how I entered, how I managed these trades, and how I also got stopped out. So the first trade I want to share with you is on the YM futures, and this right here is the 1-hour chart. The first thing we want to start with is drawing our magic lines. We want to mark the previous highs and lows. And as we can see right here, this was a previous high, which is why I'm going to draw a horizontal line just like that. And we have in this area the previous low. I'm going to draw another line right here. And as we can see, this is also a breakout area, which makes that a very solid liquidity zone. This area is holding for several hours now. We have a very nice consolidation on the hourly chart, which makes it a perfect opportunity for long entries. And so now for our entry, we want to switch to the 5-minute chart, and we want to be looking for our pitchfork candlestick formation. We want to see a few red candlesticks in a row and one green candlestick, and the price going above the high of this green candlestick. So that right here is the 5-minute chart, and as we can see right at the open, the price went straight up. And what we want to do is we want to see a little bit of a pullback straight towards our zone that we marked. So this is our zone that we marked, and you see here there's a little bit of a low here and a little bit of a double bottom. So we want to see if the price touches this zone, and then if it gives us our confirmation, the pitchfork. Now remember, we're not working with a ruler here. Sometimes the price is going to break through the lows and then reverse, and sometimes it is going to stop just before that area is been tested and then reverse, which is why we're looking at the price action and our confirmation and rules. Now I'm going to hit the replay button and see what happens next. As we can see, we have 7 straight red candles in a row, and we finally had one green candlestick right here. So the entry can be placed slightly above this green candlestick's high, and the stop loss can be placed slightly underneath, just like that. So for that, I'm going to place a buy order as soon as the price breaks through this high, and I'm going to walk you through the exact trade management. As I mentioned, I'm going to put the stop loss slightly underneath. If you're using TradingView, you can just drag and drop your stop loss, which is pretty cool. And now I'm going to replay and show you how I managed that trade live in our trading community. Now, as we can see, initially the trade went slightly against me. It was starting to get a little choppy, went back and forth, red, green, red candles. And I was starting to question if this is going to work at all. But you know, when you enter the trade, as long as the trade is valid and your stop loss is not hit, you do not have a reason to exit, which is why I held to this trade. But what I like doing in cases like that, when the price action starts to get choppy, I like to go back on the hourly chart, because the hourly chart just removes the noise and you have a clear picture of what is happening at the moment without staring at each tick. So we're back here on the hourly chart. I'm going to sell half of my position, pay myself, and move the remainder of the stop loss around break even. This way I'm out of the risk and I don't have to worry about this trade. And if you look at our big picture on the 1-hour chart, we see that this right here was the previous high, which can be used as our target area. So if you want to leave some of your position open, you can always turn that day trade into a swing trade and try to capture even bigger move. So another option to manage your trade is using trailing stops. How does that work? This is something I like doing on the hourly chart. After each candlestick closes, I am moving manually the stop loss below the low of each candlestick. So for example, this candlestick right here closed green. Now I can go ahead and move the stop loss underneath just like that. And as soon as the price started going a little against me, I was stopped out for this nice profit. Now, the disadvantage of using this trailing stop technique is that sometimes the price might continue further higher, and sometimes you're going to just miss a big chunk of the move, like in this example. Now, let's go ahead and check two more trades that I took on the NQ futures. So that right here is the NQ futures and the 1 hour chart. And by the way, I trade this instrument a lot, maybe 80 to 90% out of the time. So we're going to start with our first step, which is drawing our horizontal magic lines. We want to draw a line around the previous highs, lows, and breakout areas. And as we can see right here, this is a previous resistance zone and a high, which is why I'm going to draw a horizontal line just like that. And we have one more low underneath just right here, which is why I'm going to draw one more line. So these are the start areas that I'm going to work with. And if you zoom out a tiny bit, you see that this area is also a breakdown area. This was a previous support and we broke down, which makes our resistance zone a pretty solid zone. So because of that, I want to be looking for a short setup. And for that, I'm going to switch to the 5-minute chart. And I want to see our pitchfork candlestick formation for the short entry. So that right here is the 5-minute chart, and as we can see, the price is trying to reject this area. So before I enter the trade, I want to see one red candlestick closing red on the 5-minute chart and the price going below the low of that red candlestick. This is my entry confirmation, and this is going to show me that there are more sellers stepping in. So let's replay and see what happened. So we see that this was a failed breakout. We had a wick on the top indicating that there are more sellers stepping in, and I want to enter below this area here because this is going to give me the confirmation that there are more sellers stepping in, trying to push the price lower. As soon as we break the low from this red candlestick, I'm going to push the sell button. Now the stop loss in this case can be placed slightly above, just like that. Now initially the price started going in my direction, but then all of a sudden I got stopped out. And this happens sometimes. This is why we have our rules, our stops, and we have to just come back later and see if we have another trade. And this is exactly what I did. As soon as I got stopped out, I was looking if more sellers step in again so that I can re-enter my short trade. And if you zoom out, you see that we're still around this area. So most likely this is our liquidity sweep, and most likely institutional traders are just grabbing liquidity and will try to reverse the price lower again. And so in this case, we have another opportunity to re-enter, actually even better, because we now have a few green candlesticks in a row. We broke straight through that resistance area, and now I want to see if we get a confirmation. If the price starts going below the low of this red candlestick, I will get back in the short and re-enter, and I will put the stop loss again above this candlestick just like that. Now that I'm in the trade, I'm just going to drag the stop loss here slightly above and let this trade play out. Now, initially the price went slightly against me, but eventually dropped lower. And guess what? It headed towards this 5-minute low right here. And because I already had one minus trade, I'm going to go ahead and just move the stop loss to break even right here and close some of my position just to pay myself. So now I closed half of my position, and now what I like doing is going back to the hourly chart because I want to see how the overall big picture looks like. And we see here a very nice failed breakout. You see how the market ran this straight through the highs, had a huge wick on the top on the hourly chart, indicating sellers stepped in. And this big red candle right here shows us that there are more sellers. And therefore, I decided to hold half of my position and see if I can get out around this zone, which is a little bit of a consolidation area on the 1 hour chart, or even get out here. Now we finally got this momentum to the downside and we went straight into the zone that we marked. Remember, we marked previously these lows right here, and look how the price is trying to reject this area. Obviously, buyers are trying to step in here and the price is having a bunch of wicks on the bottom, which is why I decided to go ahead and close my position, realize my profits, and be done for the day. Now, hindsight, as we can see, the price went further lower, and if you had a little more size or a little more options to split your position into more partial profits, you could have waited and targeted this previous low right here, which is another support area, and you could have just realized your profits and closed all of your position around this area. I just decided to close earlier because this really looked at that point that buyers are stepping in and I was not willing to give back of my realized profits. And also one of the reasons because my first trade initially was a negative trade. So I hope that helped you understand how to combine the 1 hour chart for the zones and use the 5-minute chart to dial in your entries. And by the way, we trade live every day on Zoom together. If you want to check out our community, check out the link in the description below. And we also send each week, every Sunday, our gains guide where we map out the most important liquidity zones on the futures. And also I personally bring up one growth stock each week, which has a huge potential for continuation higher. So check that out, it's totally free. It's also in the description below. Thank you so much for watching and I cannot wait to see you back here on our channel again. Bye for now.